Happy Friday, everybody, and welcome to the Flow Show. End of the month, 28th of February. 2 months of the year done already. Oh, flying. Lots to get through this morning. Lots of headlines and bits and bobs, data and whatnot. So, going to be a bit of a rush job first thing. Morning, Kate.
Good morning, Ryan. It's Friday. We made it again.
Yep, absolutely. And I don't know what's happening to the clock these days. We're all going to be pushing up daisies at this rate very soon.
Yeah, it's going a bit faster.
Yeah, exactly. Let's get stuck into it. We're going to kick off with a bit of data starting in Japan and the all important Tokyo CPI, which is the leader ahead of the national numbers. If I can find it, where are we going? Where is it? There we go. Little bit on the softer side than expected and previously. As you can see, their headline CPI coming in at 2.9% from a prior 3.4%. The core number, one of the core numbers, coming in softer than expected, 2.2% versus 2.3 expected and 2.5 prior. Another one of the core measures, the ex-food and energy number, was unchanged at 1.9%. So maybe just taking a little bit of the hawkish wind out some sales there. They're still pretty healthy numbers, that no doubt. The headline CPI number 2.9%, very healthy still, though there is a 5 pip drop on last month. Just makes things, I think, Kay, just a little, or keeps people in their lane, should we say, for the next BOG meeting.
Yeah, just not to go and expect too many fireworks. That's the right expression. Yeah. For the rest, not going to read too much in it. The retail sales were okay, I must say. Because that can sometimes be a little bit of a difficult one if the consumer doesn't follow in Japan, right? But retail sales being all right is a decent sign. Um, yeah, for the rest, I'm very little to say. I don't think it's going to change much. Huh?
Yeah, exactly that. And then, as you can see there, those retail sales numbers coming in A-OK on the month and on the year as well. Mr. Ueda was up and about, and he was back to his more cautious, middle of the road approach. He said, "We'll make a decision on monetary policy after scrutinising the impact of US policies on the global economy, markets, and Japan's economy and prices." So we're in that mood. He's in that mood where he's not giving anything away at the next meeting. He says, when there are sharp moves in long-term rates that deviate from usual moves, we stand ready to use flexible market operations as an exceptional response. He was just talking to some of the moves that they've been seeing in the longer end of the yield curve. We also had Deputy Governor Uchida out saying, speaking off the old hymn sheet, Japan's economy is on a moderate recovery path, although showing some weakness. What is good news, further good news, with the upcoming wage deals to be done, Japan's Council of Metal Workers Union is looking at pay deals, or wants pay deals of some 14% over last year, which is pretty hefty. We heard a couple of months ago, or latter part of last year, I think it was, Rengo, one of the big unions, is looking for something like 5%. This metal workers mob looking at 14%. And if all the rest are looking for those sort of numbers, it's going to ramp up expectations for the BOJ, obviously. Expecting and getting, though, is always the problem. So whether they agree for such numbers is another matter. But even so, anything broadly above 5-6%, something like that, would be pretty healthy. We're right in it now, Kay. Going to start getting all these headlines and stuff.
Yeah. This is a start off actually a bit later than last year. Last year we heard a lot more in the middle of February, if I recall well, and but yeah, a little later, 14%. Yeah, They must have been talking to the IG Metall unions in Germany also too. I don't know if that's a realistic demand.
Yeah, and we don't know how it's broken down as well. It could be a several year thing or a bonus thing and all sorts of.
Yeah, could be bonuses included. Yeah, it's possible. I haven't looked at the details, just saw the headline. It's a pretty hefty demand. Um, it had been touted that very big demands would be made again because of inflation, because of getting those real wages into positive territory, which would be obviously a good thing if they get it. But let's see. I mean, the positive thing, but it's expressed in yen, of course, because the yen has been trading on the whole weaker. Positive thing is that a lot of companies have made record profits, and so there is potential for again a good year of hikes. But on the other hand, they are also seeing that inflation, and if they want to continue to invest in especially locally, that will be taken into account as well.
Yeah, absolutely. Moving on to the Bank of England, we have Deputy Governor Ramsden speaking, saying that a gradual and careful approach is needed to rate cuts, and then he hopped on the fence to get some splinters. Says that doesn't always mean the descent has to be slow. There may be circumstances when a slower than expected descent is justified, but there will also be times when conditions require that the pace of cuts has to quicken. He did say that wage growth is stronger than he expected, and the disinflation process is not as fast as he first thought, which might be taken as a slightly less dovish comment there. And maybe he's thinking about a hold at the next Bank of England meeting. He did vote for a 25 pip cut at the last one. Over to data for today. Got a ton of stuff out in Europe. German retail sales managed to see a little bit of a bounce in January. They had a pretty shocking holiday period, November, December, but they managed to post a whopping 0.2% gain in January. Missing expectations, of course. There you go. Year on year, though, that was up, but we are coming off some pretty crappy levels previously anyway. The first French numbers, CPI numbers for February, came out and much softer than expected. The French CPI number 0.8% versus 1% expected, and massively down from the 1.7% previously. The Eurozone measure 0.9%, again lower than expected and half of what it was the month before. So a bit of a washout in CPI there. We'll have to see whether there's some factors coming into that. Over in Germany, we got some jobs data, saw a 5k rise in unemployment. The unemployment rate, though, staying unchanged. Then we got the regionals CPI numbers from Germany, which was a little bit mixed, some up, some down, some staying where they were. Baden-Württemberg up, Brandenburg staying where it was, Bavaria down, so a little bit mixed all the way through for that number. We get the main German number at 1 o'clock GMT. We also got, there's Saxony in there. We also got the ECB, latest ECB expectation, CPI expectation. So I don't think they put it on this calendar as of yet, not that I can see it. Nope. Anyway, 1 year inflation expectations came down to 2.4% from 2.8% previously, although the 3 year number went up to 2.6 from 2.4% previously. We also got yesterday the ECB minutes. Most of the stuff we already know within it, but a couple of points I pulled out. The minutes indicated that they're nearing a point where policy can't be called restrictive. That was the basis of the sources piece we got after the last ECB meeting, that they were moving to saying that rates were no longer restrictive. The minute said the outlook remained heavily dependent on the evolution of services inflation. There was also a view expressed that the economic outlook from the staff projections in December had likely been too optimistic, and there were signs of downside risks materialising. Bit of hopium as well. They still see as plausible that within a few quarters there would be a consumption-driven recovery. We'll see about that. They said that to maintain a deposit facility rate at the current level of 3% would excessively dampen demand, which is a nudge to keeping going with rate cuts. Latest Reuters poll on ECB, all 82 economists see a 25 pip cut coming in March. That's next week, the ECB meeting, March 6th, to 2.5%. Over in the US, we got some revised GDP data. We're just about to, we're into the last month of Q3, so this stuff's pretty much old hat. No real change, 2.3% for that number there. PCE was a little bit higher, 2.7%, but we get the monthly numbers for February today. Is it February number we get today? I need to check that. Or was it January's? What are we getting today? Where are we? January's numbers. Okay, so that may be included in that GDP number anyway. No, they won't, because it's January's. Sorry. Getting all mixed up. That's Q4 data. So we get the January PCE today. Durable goods, on the other hand, showed a nice positive number, 3.1%. Goods orders, though core goods were a little bit softer, coming in flat on the month. These is January numbers as well. Take out defence, we're up 3.5%. Initial jobless claims was also out, and a little bit of a bump up, 242,000, but continuing claims staying around the 1.8 million and 1.86 million, so no real wobbles there. Whether this might start to show, I don't think it shows these government cuts in the jobless claims data, because there's a difference between some federal and some government workers classed differently. So I don't know if some of that's in there or not. But anyway, it's a little tick up, but nothing to worry about. A bit later on, we had some pending home sales data, which saw sales down 4.6% month on month. So far, housing data hasn't been all that, but it's a funny time of year. December, January can be a funny time of year for people not moving home or buying homes. Might see a pickup. So it's just a little bit of a funky time around that winter period, end of the year period. Obviously, with Mr. Trump coming on board as well, and what the Fed's getting up to, that can influence the housing market a lot as well. But we need to see further numbers to see if that's a trend of weakness developing there. Fed's barking. He's seeing a lot of uncertainty on the firing side, and he's talking about firms and businesses. He says for hiring to rise, businesses need to have confidence. About not firing employees. He says firing of employees on the government side, though, is real, and we know there's more of that coming. Fed Schmid says we may need to rethink the concept of core inflation, given that once volatile food prices now behave more like other goods. He says Fed's MBS holdings are influencing 10-year yields by some 50 to 80 basis points. So that could mean a big readjustment coming. Fed's Hamac says the Fed is likely to hold rates steady for some time. Fed's Harker shouldn't move to act on policy in either direction based on one report covering 1 month of data. Taking a line from Goolsbeast there. Says the Fed watches the data, then will react if it must. He was undecided in December on whether to go for 1 or 2 cuts in 2025. Says right now there's lots of uncertainty, and with that uncertainty, I'm in the camp for now of let's stay where we are. He is seeing some broad-based consumer nervousness, though. But says we should not remove any option on rates. We could move in any direction. Kate, anything to pick out from any of that data? Eurozone inflation stuff doesn't really move the needle for the ECB.
No, I don't think so. As we've seen this morning as well with we had a little bump in the euro when the German sticky numbers came out, but French were lower. This is not what the market seems to be trading right now. So we are having to take care of other stuff. I think the initial jobless claims that we're looking for, I think, is people who file for insurance also for having lost their jobs. But if those government workers are getting paid until September or so, that was the deal, or at least parts of them, will that not only show up in the data in September? I'm starting to wonder. But yeah, I can be wrong there as well. I mean, it's such a mess and such a confusing thing as well. I'm not going to wonder too much about it. Just we will hear from the fin tweeters when the job reports comes out really really bad. They will say like, oh yeah, that's the government jobs. So yeah, they will know everything. For the rest, nothing really to take away from too much of the data. No, I would say we're not learning too much. It's unfortunate for now, but on the other hand, with what I was saying, with Trump now seemingly having made decision on some countries, which is still, of course, possible to evolve. Data may be important again for a few weeks, especially in the majors, I would say, because he hasn't really gone yet against, well, effectively say what kind of tariffs would be slapped on Europe. It could have to wait until April, and the rest we kind of know what he's going to do. I think the most uncertain, I think, is going to be Mexico for now, rather than Canada. I thought it would have been the opposite, but it is the Mexican situation, which seemingly still seems resolvable to a certain extent, and that is, I guess, where we are right now.
Yeah, absolutely. And I'm going to take the deep breath and dip into all that stuff now with Trump and whatnot. Firstly, we'll talk about his meeting with UK PM Starmer. He started off saying we will have to look at possible sanctions on the UK, tariffs and whatnot, but later on followed up after their lunch, dinner, whatever, saying that it's possible we do a great trade deal with the UK soon. By and large, it seems that everything was pretty friendly. So the UK might be insulated a bit from the tariff stuff. So you're seeing that playing out in part in pairs like euro sterling, more so than perhaps cable. Then Trump clarified what's going on with tariffs because there was some confusion about this all. So he made it pretty clear that there are different tariffs, different measures, parts one, parts two, whatever you want to call them. So the tariffs scheduled to go into effect next week. These are the Canada, Mexico, China stuff. This is to do with immigration, drugs, all that sort of stuff. Will go into effect as scheduled, obviously pending any deals in the meanwhile. He also said he's going to bump another 10% on China on that day. He said that tariffs part two, which are the reciprocal tariffs, that deadline date remains the 2nd of April, and it remains in full force. So he's clarified now that we do have two sets of tariffs, the reciprocals and the Canada, Mexico immigration, drugs stuff, and those deadlines remain as they were. China reacted to that by saying they will take all necessary countermeasures to US actions. Been saying that Canada's been pretty quiet compared to Mexico on these first round tariff stuff. Well, the Canadian Public Safety Minister, whatever he's doing, says progress has been made so far on tightening the border, and that should satisfy the US administration. But then Trudeau was out saying we will have immediate and an extremely strong response if the US imposes tariffs next Tuesday. So he seems to be pushing back. Now, as much as they've been quiet, doesn't mean they aren't working behind the scenes to get things done. But just on what we know and have heard, it has been relatively quiet still from Canada. And like the others, they won't be shy in putting things out when things are going well. Mexico, on the other hand, as Kay just mentioned, still popping up the headlines, still going gung-ho in seemingly wanting to get stuff done. Their Deputy Economy Minister says that Mexico is analysing other measures after imposing tariffs on low-cost imports. So that's pointing towards tariffs on China and the like into them, which then get re-upped and sent through to the US. There's also been an agreement between Mexico and the US on a joint effort to counter organised crime and illegal fentanyl trade. And as part of that, Mexico has offered up some crime bosses and cartel members or whatever to the US so they can face punishment over there. So still, as I say, Mexico, at least we're hearing, are pulling out all the stops to get a deal done. And they are probably more favourable to get something done. At the very least, we might get a deadline punt just on the basis that they're making progress so far. So they need a bit more time. So Trump will be happy to extend that time. There's still a risk that we get no deal and that tariffs go on, but I think that's a pretty low risk. Canada, Kay, I think that's still a 50-50.
Yeah, as you say, a bit unclear. They have said that they're working hard behind the scenes and stuff, but they're also working on countermeasures if the tariffs go through. I found it quite funny that Mexican thing about the sending those drug lords to the US. Trump wants to stop immigration. In return, Mexico goes like, yeah, you can have a few of mine for a chat. Yeah, it was really funny. I had a good laugh about that one.
Yeah, exactly. And I'm still getting a bit of a feeling that we might get a bit more with Mexico. That they're working on maybe some of the reciprocal stuff or the trade
Yeah.
stuff. You know, they might try and get a bit more done than just what's under the scope of tariffs part one. I think if they get that, we're going to see a decent reaction in the Mex.
Yeah, and I've got the impression as well, Ryan, is that from even the US companies, there's a bit of demands going around saying to Trump and his administration, like, be careful because we do import a lot of stuff from Mexico. So maybe they have some undercover support somewhere as well within the US.
Yeah, exactly. So yeah, I know you're still running short Mex as well, dollar Mex.
Yeah. It's like relatively quick for parts, but I'm in agreement. I think there could be a bit of a solution. Sold it first time around above 2050, bottom back in the 2040s. This morning sold again, already bought half back as well. Just trying to keep a small running, and now the risk is virtually zero on that one, even if we fly a bit, as you say, perhaps into the weekend, a bit of uncertainty covering. But yeah, let's see what happens. I think Scheinbauer hinted at something about next Tuesday, but I haven't seen whether that's confirmed or not.
No, I think I don't know if it was talks or something, whatever. The deadline's what, Wednesday? Is it Wednesday?
Is it not the fourth, right? No,
It was Tuesday. Yeah. I just didn't know when the
Tuesday.
fourth was. Yeah, it's Tuesday. So yeah, I mean it's Friday today. So you know, there is still some weekend risk for the Canadian dollar and the MEX. I'm in the same. We've all been jumping. I know Blake's on it as well, just shorting up in these rallies up into the 2050s. I'll be happy to sell it any other rallies I see here, and I think maybe as much as the market looks pretty calm with this, I mean the price action says that it's pretty calm if you compare it to some of the spikes we've had on all this trade stuff that's been going on. It's pretty calm at the moment, but I wouldn't rule out maybe a bit of squaring off. Anyone who's short dollar MEX like us might just square off into the weekend. So we could see a bit of a jump up, maybe 2060s or a bit more. I would be happy to hit those rallies as well. And I'd be happy to keep this one over the weekend.
Yeah,
I
me
think,
too.
even if we get some slightly negative headlines, I still think they're going to get something done by next week.
Yeah, and I'm thinking that next Tuesday may be a bigger day than this weekend. But with Trump, obviously, we never know. But yeah, I think next week we need to be a bit careful. Obviously, if he says like, oh no, nothing is satisfactory, then the MEX will get a slap again, and I'm going to run for the exit. But for now, I'm quite happy. With all the ping pong, the average is pretty cool. So I'm quite happy to let it run as well for now.
Yeah. And here's the difference between the MEX and the CAD. The Looney's still looking fairly weak and still got that volatility and worry in it. So we're back in this zone. We had the break, we've had the retake. Now we might get a test of the top, but I wouldn't be looking to trade this just now. Not on a Friday, not with this deadline coming up. We could see another move, no deal, boom, we're up here 146s or something. I still think it's possible that a deal is done, but I'm not don't have as great conviction on that as I do for the MEX. So this one could be a bit of a wild one. I'm not going to touch it, certainly ahead of the weekend or over the weekend, and see what happens next week. I think if we get a no deal type scenario and we get a big rally, then maybe I'll see if it's worth trying to trade some of these top areas if we get to peak pessimism for that sort of stuff. But this one, you've got to be a bit careful if you're thinking of holding positions or if you've got positions going into the weekend. Just before we move on, we've got a new Ali Nadeem has popped up. What currency you trade and how do you place trades? And K-Man has put the link up there to our platform if you want to check that out. Ali, back for 10 days. Just to give you an idea, this is our chat room. Okay, so we have our general discussion where lots of people do lots of analysis, so you can see what we're getting up to, what markets are doing, what we're thinking about, various bits and bobs, and then actual trades themselves. This is a voluntary room that we ask people, if you want to post a trade, this is where you post it. A lot of these trades are just entries and exits, and they will formulate back to what's been discussed in the general chat room. And the reason we do this, and we ask people to post trades in good time. There's no posting 2 hours later, oh, I bought XYZ at what price and I've sold it for 100 pips better off, and I did that 3 hours ago. We don't want that sort of stuff. We update as close as we can to when we enter the trade. Obviously, trading is paramount, but as you can see there, updates all through the night, just before going to bed, what we're doing, stops, take profits, that sort of stuff. Blake closing trades, and these are done pretty much as they happen. So there you can check that out. And we got various other chat rooms in there, news and research, and the good old Flowonomics pub room, as we like to call it sometimes. So yeah, do check that out. And anyone else, you can get that for just $1 for 10 days. I mean, you can't even get a pint for that these days. So go and check that out. Euro dollar, going to have a look at that. And as I mentioned last night in our chat room, we have got a bucket full of expiries going off between 103.80 and 104.10. I think it's around about 6 billion going off. So no surprise to see where turning around those levels at the moment, sticking pretty close to it. No headlines, data hasn't really done much. We'll obviously see what happens with Trump when he hits the toilet for his morning poo break and starts dropping the truth bombs. But otherwise, these expiries look like they're keeping that glued around the big figure at the moment. Dollar yen, that's had a decent rally back above 150, pretty much taken off pretty well above 150. The level we've got in play right now, let's square that off a bit, is this 150, 70s, 90s, you can probably call it, maybe up to the figure as well. This is where we got the dips holding twice down here and a significant rally after that. And then the break led to this move down to the 148s, which is a significant level as well. Now, as you can see, this 150 level has been big. This 150, 80s, 70s, 80s, 90s, whatever, has had a lot of saying things recently and a bit further back than that as well. So this is going to be a pretty decent test for the rally here. Kay, we might still have some end of month dregs going through, but rally sellers have been in place all through the year. Is there any reason to change it, bar the fact we might have the potential for a decent triple bottom down here against this level?
I still think the tailwinds for the yen are potentially there, but what we're seeing today is sort of an overlay of what we saw last month. You do the well, not especially only in dollar yen, but in the yen crosses as well. We saw lows printed there overnight on various yen crosses, and then a sharp rebound. And we had a similar last month. Talking about the month end flows, the models are calling for potential euro yen selling, and then we saw it. And last month it lasted until the one day before last of the month, and today looks like a bit of an overlay. And we saw that low big break. I will show the euro yen. Big potential break under very big supports, and now we are ramping back higher. You know what? Wait for the start of March to make a decision on the yen, perhaps, unless well, just the levels are attracting around that 150.80 figure in the dollar yen. And what we also saw over the course of the whole week, while you are on the euro yen, there are sellers around above 157. So if ever we get back up there, maybe an interesting watch again.
Yeah, and I can't believe I'm going to do it, but head and shoulders on this one.
Yeah, but that's what I have. I'll show it. I'll show it, and it broke the neckline overnight. But
yeah, and could we be getting one in dollar yen? Perhaps. Obviously, need the right shoulder to form here, but maybe something like that. Oh, not that far. Hang on. Let me.
If we go back up there, I think a lot of people will have a headache, Ryan. If we get back up to 157, I don't think that's in many people's playbooks right now to get back up there. But
no, maybe something about 155 or something like that.
Yeah. One could also argue if you go onto the daily in dollar yen that. There's one forming. The problem is that the neckline is miles lower. But yeah, it could form. It could form on the shorter term head and shoulders. But I wouldn't call it right now. But yeah, I'll show the longer term because it's interesting as well.
Yeah, let me get rid of that already.
Yeah, no problem.
Yeah,
it's one of those. Dale can sometimes put lines like that on the thing, which are sometimes funny, but then sometimes extremely accurate. I recall a few, which is good, obviously.
Yeah. It's all witchcraft. You can keep your head and shoulders. Yeah, nothing for me. Right, I know Kay's got a and a more in-depth look at gold. But I just wanted to have a quick update on my ones because, as you know, I like to try and show. Oh, bloody hell! I'm stuck on that. I like to try and show how the picture builds up, and when you're trading levels that have no prior history other than the short term, you need to just keep an eye and see what's working and what's not working. So we've had obviously the highs up here. We've had this secondary level that's been respected, so that becomes a bit of a level as well. It's 29.20, also support and resistance area. 29.08 round the figure, bit washed out, so I'll keep that in for now, but I might get rid of it depending on how we approach another test of it. Some of these other levels, 28.80 was a bit of a one, but it's washing out. But you can maybe call it a bit of a zone, 70.80 here. 28.59.60 was a bit of a level. We had a little poke underneath, but we're back above, so that needs a bit of consideration. Under there, though, it might be a case we just match these lows here. So I might just stick a quick one in there, just so we can see what's showing up and what's not. And I'll make it white. Oh, no, I won't. Where am I? There. I'm just going to make it white so we know it's a new one. Otherwise, we're talking 28, 39s, 40s as a possibility of support from here. What are you making in the short term? We get the usual, it's a dollar move, it's a this move, it's a that move, it's the other move. It's a down move. It's coming off of what could be a pretty solid top now.
Yeah. What do I really make of it? I think we are correcting still, but it could shape up like the correction we had in November, in which case we could go quite a bit deeper still. It's a bit funny because we are trading an inverse correlation that people usually would trade. I think it has to do. There's one part of me that thinks, okay, this we may have really seen a top there in 29 in those mid 29s. And come off down to 2500, but I don't know yet. I still think that gold is going to be one of the trades of 2025 still because of Trump policies. But we have to be very careful, and because it has been volatile, because there's been so much to do with so much to do with why is LiveScope making noise? So much to do with those shippings from the Bank of England to Fort Knox. So those revals that may or may not be coming, and we need to be a bit careful with what we do and what we expect now. Okay, so it may have the next leg higher may have to wait now for a bit, unless we are not even going to look at 2790 or deeper. Yeah, so for now I'm being very cautious. I actually gave it a couple of tries, but I mean in amounts that smaller amounts that I've ever traded in the run up. So because I don't want to be wrong for a lot, and just gave it a couple of tries to see if immediate supports would hold, but they don't. But there's still big supports coming up, but I think we need to be a bit cautious and perhaps time. Once we will know about exactly what kind of tariffs and stuff he will slap, then we may have another wind. I was surprised, or half surprised, that we actually did not see a move back up when Trump decided to slap tariffs on China, because typically when there is a bit uncertainty surrounding China, etc., they are relatively quick on the ball to start buying gold again as a safe haven, but they did not. So that tells me that we need still to be a bit cautious here.
Yeah, and you also need, as usual, to have context. If you look at this move, in the scope of what we've had in the last over a year, it's a looking a minor pullback. I mean, we're not even yet down to the 38.2 of this leg up, and certainly miles away from any fibs in that entire move. So longer term, it's still very bullish, but obviously we all get stuck into the short term stuff, and that's the biggest pullback we've had since this rally from December. So it is looking fairly hefty at the moment. But again, your fibs are going to be your guides. If we're getting through this and the 50% retrace, then this phase of the trend is breaking. So it's always worth having a look at the context and the time frames. But you're right, Kay. When a dip buying has worked all the way up and you suddenly find that it's not working now, it's sometimes you just got to sit back and let it do its thing and see if it's going to stop falling. And when it does, that's when you potentially look to get back on the horse again. But there's no point, as you know, you do this. You're not gonna have 5, 6, 7 goes at buying the dip before you decide that's not the way to do it for now. You need to wait for that evidence that you found a bit of a bottom before you get back in, Kay.
Yeah. Actually, you know what? Stay on it. Zoom. Go out to the daily.
Yeah.
Or to at least the 4 hours, and where you showed those fibs of the last move. It's a bit unclear, perhaps. You see no, I think you've got it there. The 38.2 of the move from just November, after we did the November low. Okay, there. And there up to the highs. And there you go. Look at where your 38.2 comes in. Right at the prior high. That is, to me, your first really, really, really decent level in gold. That's what I was looking at this morning. This is really your first very decent level in gold. For as long as we are there, or even or holding above, I think it's quite important. And the next one comes in. No, that's perhaps a different one. But you have those other two double tops there in the 27.25. That's my next big zone. And so in the more longer term, more medium term, those are the two levels that I'm watching now. Because if you look at what the November did, those $250 to the downside, or 200 and even a bit more, 250, 260 or so. If you subtract that from the all-time highs, that brings us back roughly into that zone, and that to me is going to be very important.
Yeah, cool. Well, let me pass it over to you, mate, and you can look at it all over again.
No, gold, I think we've done we've done it. I just wanted to have a quick look at those things in yen, because there's a bit of an interesting stuff going on there. More on the medium, on the longer term. And if you look at what's happening here in the longer term, this is a weekly, okay? Look where we stopped on the downside, very, very close to the 100 DMA, okay? 148.5. Also on those prior lows that we already discussed. But what I want to show here is the clouds. And in the shorter term, we have seen that this 150.80, 151 is a resistance zone. But in the more medium term, we also know that the 152 was a bit of a magic level. But look at where the weekly cloud comes in. Just right in between there, in between 151 and 152. This is something that the Japanese are watching, okay? And it's a thin cloud. And even next week, the cloud is even going to be thinner. So this zone here, 51, 52, is really going to be important just because the Japanese are watching this. I always, you do your own research, you do your own findings. That's what I'm always doing. But when you trade a currency, and especially one like the yen, you need to know who is doing what in the currency as well, and who your main players are. And since we're talking about yen, obviously the Japanese are main players, so we need to know somewhere. I'm always trying to know or to uh, build expectations on what people are thinking the main players in currencies. That's what I always like to think about. Yeah, this is the one in the euro yen that a lot of people were looking, and this 155 and a half, 156 was the big zone. And we had a dip below, and it really looked like a solid break overnight. And then all of a sudden, this morning we wake up, as I was saying. Also yesterday, I was saying this in the room. I said the models are calling for this, but watch out for the backlash on the last day of the month. And it seems we already got one. So I think a lot of short termers got perhaps a little burned on that. Shot up to 156 3/4 this morning, but look at what happened since the start of the week. Every time we got above 157 towards 157 2030, we found sellers. I also think that this has to do with the month-end flows. Um, so if we'd ever get back up there before, let's say, our afternoon, um, uh, say for instance that we get up there at the time of the PCE or so this afternoon in the US. Watch out very carefully what's happening there in the 157, 157 and a quarter zone, because it could cap. Now, thinking about fixings, if we go into the 4 p.m. this afternoon in London and this thing breaks, be careful, because there may be a few shorts as well who have to run for the exit. So that's the thing. Ali was looking at the Swiss franc. I've been talking about this Swiss franc a few things. Are you talking about this 92 double top, Ali, or are you talking about another one? I think we're in a bit of a this one, yeah, yeah. But then look, if you would have assumed that this one, your double top, was breaking here, we've gone down to the 61.8 and bounced. I think we are around a bit of a interesting zone here, getting out of today. Whether we are going to be above or below this 90 and a quarter, maybe interesting on the dollar Swiss. Okay, I wouldn't be surprised that we see a move back up to 91 if this 90 20 25 is starting to hold. So that is what I think. Yeah, but Ali, and I know what you're saying. What about the Russia-Ukrainian war-related news, Swiss strength? Yes, we have been trading that. It has been trading that. But the market is very sanguine, and the market trades it for as long as the money needs to be in a safer place. But those flows are not continuous, you know. You only trade risk for a certain period unless the market is wrongly footed and has to get out of massive positions and turn the ship to the other side. Then you're going to do that for a prolonged period, weeks, even months. The thing is, right now, as we've been saying so often, the whole situation is very fluid. So one day you trade, or 2 days or 3 days in a row, you trade the Ukraine related news, but then you come back into the middle because the flows have dried up. That's the unfortunate in the market, is that right here and now, and you can look at whatever you want to look at. We had a very big move. Now we are here in the euro dollar, for just taking the euro dollar, and you can look at a lot of stuff, and you will find relatively the same pictures. Now we're turning around here in a 105 and a quarter, 102, like three big figure range. But inside this range, you went down, back up, back down, back up, back down, back up. The market is trying to find its way as well. Yes, we have dollar buying flows on the back of those tariffs right now, and normally the models were calling for it as well, even though I found the signals not being very big. But the market is also saying that there should have been a bit of dollar buying. That may all have played a role here. But if you look at since the big move had been done, if you look at it, we are trading relatively sideways. Okay, to create big stuff, you need flows. You really need flows to drag it around, or big breaks. And for the time being, we can hardly say that we had big breaks. The overall move is unchanged. That is still a trend, and this is still a correction inside a trend for as long as we are below 106, for instance, in the euro dollar. But you can hardly call this here a trend, and this is from virtually from the election. We have done then printed the low. We have done the highs in the dollar just before inauguration. Then we had the setback. Then tariffs coming into play, and now we are mooching around. So we can hardly call a trend for now, and because you need the big market players need to go like, okay, the tariffs, they are now in place. What does it mean for currencies over the course of the next months? And then you are going to see a new trend develop with levels really being broken. Okay, so that is where we are, and I think, looking at the time that I've taken up enough of your time, I'm going to give it back to Ryan with all this.
Yeah, thank you very much, mate. Great stuff this week as always, and thank you as always to you boys and girls for coming to the Flow Show. Hope you had a good week. Don't go spoiling it on a Friday. Have a great weekend, everybody. Stay safe, and we'll go again next week. Have a good one.